Hey everyone, me Kevin here. We've got to talk about crypto because lately it's been going through a little bit of a cyclical period of FUD. And now this happens with cryptocurrencies. Sometimes they're really hot like they were between December and, well, pretty much up to about 4 weeks ago. And then sometimes they're not super hot. One of the things, in addition to some of the new crazy things going on that we're going to talk about in this video, such as what the Treasury Department's doing and some of the other things going on with shorts and that, one of the things to remember when it comes to cryptocurrencies is that they are cyclical, but it's not just cryptocurrencies that are cyclical, meaning they go up and down depending on people's moods and the cycle of those moods. But they really just do what all other sectors in the stock market do. We know Tesla's hot for 3 months at a time, and then it's not. We know that sometimes you get industrials that are really, really hot. Everybody's investing in John Deere and Caterpillar. That works really well for certain periods of time. And then other periods of time, it's pharma. And more recently, it's been momentum, which I'll tell you, momentum is probably by far the most fun to be a part of because the community and the momentum community are really, really strong. I actually think a lot of the folks in the momentum community are the same folks in the crypto community, and crypto sometimes almost becomes a version of momentum. Really great sort of world we've got and great community. I really see momentum and crypto as the definition of retail. Although lately, institutional investors have made up over 60% of trading volumes, especially in larger cryptocurrencies like Bitcoin and Ethereum. But here's the thing. Even though a lot of cryptos lately have been selling down, we got to keep this in mind. When we look at Bitcoin, for example, we're up 282% year over year. We were up 5,700% in the last 5 years. So, you know, a little bit of a decline here. You sure? We were off all-time highs by maybe somewhere around 45, 48%. Hey, it happens. Cyclical, not as bad as it could be. And there are lower support levels we could still test. We could support, or we could, if we break through, in my opinion, on Bitcoin, for example, that $31,000 support, it's not going to be great because the next support level is like 21,000. But the good news is there's a lot of clarity coming to cryptocurrency within the next 6-ish months. Here's what I mean by that. We know that a lot of investors who love Bitcoin are waiting for more companies to adopt cryptocurrencies, or at least some portion of them, on their balance sheets. For example, Kathy Wood at ARK Invest suggests, hey, if every company in the S&P 500 just had 1% of their treasuries, their cash on hand essentially, in a Bitcoin should be $400,000 in value, which is incredible, and I think one day will happen. When? Well, that's a big question. But right now, a lot of companies still aren't exactly sure what the details of regulation are going to look like, and we know that regulation is coming. Not only do we suspect that it's coming, we know it's coming, but we also have some dates. Take a listen to this. The Treasury Financial Crimes Enforcement Department is issuing new anti-money laundering rules and finalizing these rules in the fall. These current proposals from the Treasury Department could require tax reporting or just reporting to the government any transactions as low as $3,000 within the United States and as low as $250 internationally. Now, initially, we might think, oh my gosh, like this is overbearing. But quite frankly, what would be overbearing would be banning cryptocurrencies like some countries like Iran are doing, or banning crypto mining, or banning crypto transactions in China or whatever. Those are bigger concerns. Reporting for transactions $3,000 in the US, that would be down obviously from $10,000 where we stand now, and $250 internationally. Okay, it's not as simple and loose, but if that's how tight they're going to tighten the screws on us, it's not bad. It might be bad for some criminals, but not bad for the vast majority of us. And really, we expect not only these rules to sort of be finalized by the end of the fall, but we expect them to be fully submitted and into effect by the end of the year. This actually creates a catalyst point for us. As an investor, I'm regularly looking for catalyst points, and mostly I'm looking for inflection points. Inflection points, in my opinion, are the best time to invest. This is when a new trend is beginning and people don't see that new trend yet. Because when markets inflect, so I'll give you an easy example here, okay? When the real estate market inflected in the summer of 2018, nobody believed me when I was first saying the real estate market is about to tank. Like, I'm seeing it. I'm one of the first people to see it. It's a big problem because I'm out here on the field and I'm really nervous about it. It's happening. It's starting. I see the numbers. It's starting. I was in it every single day watching it. And when I alerted, first nobody cared, but I saw the inflection point. Within 6 weeks, real estate prices had fallen 12%. And that's when Federal Reserve Chairman Jerome Powell started cranking rates, and rates shot up like 1% in real estate, which makes sense, but it was incredible. And so it's these inflection points that you want to identify early. And catalyst points, such as these laws passing and that uncertainty being gone, are important. It's kind of like when we invested right before the election. We didn't know what the outcome of the election would be, but we knew there was a lot of uncertainty going into the election. But what goes away after an election is uncertainty, and people like certainty. No matter what the outcome is, people like certainty. So I believe that come the fall, towards the end of the year, we could have a big potential catalyst for resuming a crypto run. Excuse me. And this is also going to be combined with some short-term issues between now and then. For example, shorts shot up again over the last 3 days in Bitcoin, at least according to DataMesh, which measures activity on Binance. Shorts are up substantially again. They doubled from 4 days ago. There's a lot of shorting happening in cryptocurrencies right now, and it's really just the same hedgies and the shorts that were shorting other assets like tech and consumer discretionary earlier that are now shorting cryptocurrencies. So this is going to add to short-term pain. So the next 6 months, while we wait for new rules, while the shorting happens, more pain, more pain, more pain. But another good catalyst that's coming, there's actually an article this morning in CNBC about this, and we've heard this before, that in the future there'll be a digital dollar, like a central bank digital currency, a CBDC is what they're called. And a lot of folks are like, okay, yeah, whatever. Most people don't consider that as meaning anything. Nobody really cares about a Federal Reserve coin or a Fed coin or whatever. But we actually should, because when we have a Fed coin and we start legitimizing what a digital dollar is, and people start realizing that, wait a minute, a digital dollar is different than just digital numbers of my regular paper dollars in my bank account. When people start realizing, wait a minute, there's actually a difference there. Well, first of all, hopefully they'll take advantage of the 40% off coupon code down below for my amazing programs on building your wealth in real estate, stocks, the psychology of money, property management, sales, or YouTube. Check those out down below. Use that 40% off coupon code. But I think what'll happen is people will warm up to the idea of, wait a minute, if the Fed's doing it, if we have that regulation in place, and this is actually a safe thing, we don't have to be as concerned about digital dollars or things that are pegged to the dollar like USDC, then that could lead more people to actually get into cryptocurrencies in the first place and invest in some of the top tier investments in the crypto space, which right now the top two are obviously Bitcoin and Ethereum. And I think they'll benefit substantially when we start getting more people who today are like, ew, cryptos, I don't trust cryptos. And they actually start becoming believers because the Fed is doing it and the government's doing it. And then we'll see it as an innovation rather than as, like even the word crypto, it feels like underworldish to people who are very not knowledgeable, when reality is it's the most transparent and secure form of transacting that we've ever had before in our lifetimes. So anyway, the problem is we have to go through this transition. And it's not just a transition of Treasury Department rules. It's not just a transition to getting people familiar with the digital dollar. It's not just a transition of getting away from the short sellers, but it's also surviving this transition and period of additional and increased volatility, because as inflation expectations potentially go down, there is potentially more selling pressure that we might see on some cryptos. Not all. I would venture to say 20 to 45% of people like cryptos as a hedge to inflation. Maybe it's less, maybe it's more. I don't know. I ran a Twitter poll and it was somewhere around a third of y'all, based on my memory, somewhere around a third of y'all invest in crypto as an inflation hedge. But then again, I also have a little bit of a biased audience, so that's why I think this range is probably more appropriate. But look, as inflation inflects downward, we might see less people potentially use cryptos as an inflation hedge, and that could create some additional downward pressure. So I would say the next 6 months, and I don't know this with certainty, right? I mean, maybe watch tomorrow crypto skyrockets. So it's like people are going to leave all those comments, oh, this video didn't age well. Whatever, I'm always just going to tell you what I believe, and I'm not trying to FUD either. I'm very optimistic, and I'm diamond handing my cryptocurrencies. I've got over $300,000 in cryptocurrencies, and I'm diamond handing these. I just want you to know that I believe we're going to have these big catalysts that are going to be very, very positive, additionally positive for cryptocurrencies when we finally get the Treasury Department's Financial Crimes Enforcement Department rules out towards the end of the year, when we finally get the short rotation to end, when we finally get away from this volatility based on inflation or caused by inflation, and when we finally escape a transition to a more transparent and green cryptocurrency environment where maybe the North American Bitcoin Council finally gets us much more green than we currently are. We know that the statistics are a little skewed with, 70% of cryptocurrencies use renewable. Yeah, but not for all of their crypto mining, right? So there's a lot of work to be done. Anyway, that's my thought for right now. Thank you so very much for watching. Really appreciate you. Check out those courses down below. Use that coupon code. And folks, we'll see you in the next video. Bye.